Good morning. This is Dylan Jovine from Behind the Markets. Happy Friday, TGIF. I will tell you that this particular Friday I'm excited about because I've had a week and we all know what that's like. Anyway, today I wanted to talk about the stock market, which is what we do here. But a lot of folks have compared Trump's win to Reagan's big win in 1980. And there's a lot of valid comparisons there. In many ways, I agree with that, especially the relationship between the government and the people seems very likely to change. And that's probably a good thing, God willing. But the stock market itself offers a few warning signs to that kind of thing. And for at least 6 months, or actually 5 months, I've been saying this stock market's outrageous, we're going to bubble, et cetera, et cetera. That bubble's just been made worse by this Trump bump that really popped the market up, and I'll get into that in a minute. But I want to talk about Reagan. I dug through some old data here to find out just what was happening during the lead up to the Reagan-Carter election, their presidential contest, and what the market did afterwards. And there are some very interesting parallels here that I wanted to share with you for those of you who like to geek out on this kind of stuff. During the 1980 election, presidential election between Reagan and Carter, the stock market, and I didn't even know this, went up 29% that year. Very similar to the market that we've had that's up 33%. Really remarkable. And the stock market also jumped hugely when Reagan actually won the presidency. It jumped like 3%, just like the market jumped now. What I do remember, and a lot of people seem to forget, is that the first 18 months of Reagan's presidency, stocks entered a bear market, which dragged the S&P 500 down 29% as a recession hit the United States. And by the way, side note, that was despite the fact that the market had a P/E ratio of 7.5. Can you imagine the stock market with a P/E ratio of 7.5? My goodness, imagine that. Right now, our stock market has a P/E ratio of 27 at least. And our market cap to GDP is over 200%, the Buffett indicator that we talk about. So it's really crazy. Now, one of the other things that I want to talk about is a lot of folks are saying the market's jumped up 4% since Trump was elected. That's really a sign of things to come. It's amazing. It's telling you what's going to happen. That's not necessarily true. So why has the market jumped up besides just a lighter regulatory environment? And this is something I want to share with you. Pull the camera back a little bit. Basically, Trump has said that he wants to lower the corporate tax rate by 4 percentage points. Now, basically, that means that if he lowers the corporate tax rate, profits will go up in all of these companies by the amount he lowers the corporate tax rate by. Basically, that goes right to the bottom line, right to the bottom line, right to the bottom line for all these companies. So, of course, the market is jumped up by 4%, basically the amount that he said that he's going to lower the corporate tax rate by. To adjust for that, now, it should go up a little bit of a premium to that. The bottom line is, there is no doubt about it, that's going to be good for business. Even just lowering the tax rate brings profits right to the bottom line, which sends stocks higher, expansion, higher earnings, which just push the stock market a little bit higher. So that's very positive. Companies will earn more money. They'll be able to invest more in growing their businesses. They will be able to buy back stock, make acquisitions, and do all these wonderful things. And I actually think that's going to be one of the biggest beneficiaries of Trump's presidency. It's going to be basically what happens in mergers and acquisitions, takeovers. And we, of course, have a service that has done very well. Since we opened the service, Takeover Targets, we've closed 3 losing trades since we launched in January 2020. Gosh, that's pretty darn good. And we've gone through all types of markets in that thing. Up markets, down markets, Biden, this one, that one. It didn't matter. We're just bobbing and weaving and Takeover Targets. So anyway, again, I don't want to be a Debbie Downer. I'm not trying to rain on anybody's parade. I'm just bringing you inside my mind to show you the bigger picture, take you behind the markets. There, I got to use the name of the company. Pretty cool. And show you the inside of what's going on here and why it pays not to drink the Kool-Aid. Be patient. Watch the risks. Take measured approaches, measured bets to all this stuff, and not to lose our head and not to get caught up in the hype. Let young people or uneducated people get caught up in the hype. People who don't know history, who don't have experience, but we can't afford to do that. That's the benefit of getting old. We trade the beauty of our youth for a little bit of wisdom, just a little bit of wisdom. And that's where I'm coming from today. I'm just trying to share some of my wisdom with you, some of my experience, and most of it has been very painfully earned. Anyway, that's all I have today. I hope you have a wonderful weekend. Bye-bye.